Hey guys, welcome back. In today's video, we are talking about how AMC is crushing shorts, the big banks default, the margin calls flooding in, and many more in this video. First, we're taking a look at this. People complaining about spending money on theater upgrades, including premium theater experiences, can go kick rocks. And Biotech replied with, 100% truth, anything that makes AMC stronger, improves future ticket sales, and improves profit is viciously attacked. A profitable AMC destroys any remaining short seller FUD about the company. They are so desperate. And this is something that we've said in the past before. Anytime you see news that is heavily focusing on something that AMC that has done that which is good, but they try to spin it off as it's bad, then we can understand that what they are doing is very, very good because it's to the point where the shorts are getting worried, and that's why they need to attack it. What we've seen are, of course, plenty of news which talks about why AMC spending can be viewed as bad. But then when you actually take a deeper look into what they are doing, and we covered this in yesterday's video as well, we talked about how actually premium theaters attracts more viewers, and more viewers equals more revenue, which obviously equals more profit. So by spending money on these premium theaters, they actually are able to get more money in return. And obviously the ROI is greater for having a premium theater. But yet when we see these news articles that are saying that AMC is spending so much money, but they don't talk about how we're getting the return on that money, this is how we understand that they are obviously worried. A profitable AMC destroys any remaining short seller FUD, because how can you say a company is going to go bankrupt? How can you say a company should be worth an extremely low amount when they are able to make a ton of profit? And so this is what we talked about, and again we did a more detailed explanation in our yesterday's video. Now furthermore from this, you have to understand is that if the value of hedge fund holdings used as collaterals for loans plummets, banks may stop lending or demand payment. For example, early April 2025 noted the Wall Street banks asking hedge fund clients for more collaterals due to tumbling asset values. Now, what we talked about in the past was plenty of times where we've seen how institutions, how banks has asked for, firstly, a higher margin requirement. They asked for more capital be posted because they are afraid of what's going on. We talked about how they had to increase the margin rules. We talked about how they were, again, asking just essentially for more liquidity from these Wall Street institutions. And this is obviously because they understand what is going on. One of the biggest things that we've talked about is multiple firms have extremely highly leveraged positions that could blow up at any time. We talked about how Citadel had to obviously close their highly leveraged positions recently, and they are still losing money on top of that. But that just highlights why they are worried what is actually going on. But it's essentially understanding that when things get too volatile, when things get too risky, they will have to ask for the recall of these shares, the recall of these loans, and institutions will not be able to handle this. When banks ask for the recalls of these loans, institutions who are over leveraged with tens and hundreds of billions of dollars of positions will have to close those positions, and that will obviously bankrupt multiple firms, and is why they're worried. And that's the more likelihood of happening when we are in the volatile market, which could explain why we're suddenly seeing this. So breaking, President Trump issues 90-day pause on tariffs. For those of you who've been paying attention to the stock market, you're going to be looking at some crazy movements today. We saw the Nasdaq go up 10%. We saw stocks like Nvidia go up 12, 20%. Same with Tesla, same with Apple, Palantir, all these others that have gone up tens plus percentages in just one singular day. And that's because when the market was plummeting, so many firms were taking a hit. Now, if you wanted a more detailed breakdown, obviously, this is what it is. Trump raises tariffs on China to 125, but they paused the new tariffs on every other country for 90 days. And so this is obviously a battle between the powerhouses, and what we talked about was the effects that it has on the market. Of course, you can go deep dive into this even further, but let's talk about what effect this has on the short sellers, on the institutions. First, we have to understand is that the hedge funds risk. The shadow banks are too big to stay in the shadows because the multi-strategy funds are the biggest borrowing beast among hedge funds. Now, essentially what this is that the average gross debt is currently about $12 for each $1 in the fund, the highest ratio on record. Wherever you're looking at the NSCC, the DTCC, or any others, what we looked at is that the funds that are supposed to be used to back out all these collaterals, to back up all these funds, these loans, are actually nowhere near. They're lending out too much, but they don't have the money to back it. And so at any time, when these positions go upside down, when these positions explode, they do not have the money to actually cover them. And what we are seeing is that the government may be realizing, the Fed may be realizing this, and that's why they obviously did this pause, because they need to let the market breathe. When we see what JP Morgan CEO Jamie Dimon has said is that I'm not seeing default yet, but I expect them. So it's obviously what they've said, and you can see Just Darius said 100% something blew up today. Now, you have to understand, prior to what has happened today, we were seeing these stocks dropping 10%, 15% in singular days for multiple days. And we were seeing trillions of dollars of value getting wiped out every single day. Like I said, we've seen many institutions lose money throughout the last few days. And so it's not surprising to see whether it's institutions or whether it's some small banks or even big banks that are defaulting on a large amount of their positions, and to the point where potentially all of their positions can get defaulted. I don't think that this tariff pause we saw today was a random tariff pause. I definitely think that it's trying to give room for breathing because of everything that has happened. Because when you see this, in 2008, Lehman Brothers went bankrupt, subsequently acquired by Barclays Capital. Fast forward 17 years, Barclays just activated Lehman's OTC clearing account effective May 1st. Talk about interesting timing. And so this is everything that we talked about. First, we have to understand the OTC market. We've seen many people who have struggled in the OTC market. We saw the likes of Citadel actually involved in this as well. But it's the more focus, like I said. One of the biggest things we talked about is when values are getting wiped away, when values are disappearing and all these collaterals are going down, it goes back to what we said at the very start. If the value of these hedge funds holdings, the collaterals plummet, the banks may stop lending for or demand repayment. And so what we are seeing is that all of these collaterals are all falling right now. You can see the big bank defaulting. You can see the margin calls flooding in, because you can see hedge funds are now panic dumping bonds as margin calls continue to flood in. Last week, we had not seen any signs of hedge funds getting stopped out of the bond futures spaces, but suddenly you're seeing yield spike. And remember, this is prior to what's happened today. So the funds that have already got hit has gotten hit already. They have already dumped some of the positions. They are already took losses on certain positions, and they're only trying to recover today. But what we are seeing is that despite the recovery of the market today, the collateral value that has been lost has been realized already, because they were already closing these positions. And so you can understand why they are getting worried, why we're suddenly seeing these bashing on the fundamentals of AMC, while we're suddenly seeing, these institutions coming out. We talked about yesterday's video as well, how Ken Griffin came out to talk about these tariffs are bad, and he's trying to stand up for the middle class. You can obviously understand that they aren't doing this for the retail. They aren't doing this for the middle class. They're doing this for themselves because of the hundreds of billions of dollars they have lost throughout the last few days. And not only that, is that if they don't do this, if they continue to lose money, if they continue to not have the capital and liquidity, the margin to actually cover and finance the AMC and GME swaps, the AMC and GME short positions, then it isn't just going to be the hundreds of billions of dollars that they are losing. It's going to be trillions of dollars that multiple banks will lose, that multiple short sellers and institutions will lose. And so that's why we're seeing them do what they are doing right now. You can still see this, despite everything that's going on in the market right now, as we're seeing stocks are going up 20%, as we're seeing the market recovers, we're still seeing massive stink bids and large sell walls way above ask for AMC. And so even at times like this, when they're struggling with all of these other positions, because we're seeing how, and this isn't just a source made by me. This isn't just a trust me source. This is source that are validated, that have shown that Citadel has lost percentages in February and in March. They've been shown to close down their positions. Yet, despite all of this, they still are focusing on manipulating AMC. Ask yourself this: why would they try to manipulate and suppress AMC when they're losing billions of dollars in these other positions? And that's because what is at risk for loss for AMC and GME is way bigger. And that's why they're still doing this. But yeah, guys, thanks for watching the video. I'll catch you guys next time.